Tesla reported quarterly financial results that were highly anticipated by stock market investors. One of the surprises for me is that in the aftermarket hours, Tesla stock is relatively flat. It's down 0.03% as of this recording. This is a very volatile stock, so the fact that the stock price is not moving violently after earnings is a surprise to me. Of course, I was one of the only few people that starting in 2025 told investors to sell Tesla stock. I had Tesla stock rated as a sell to begin the year. I shorted Tesla stock to begin the year, and I took massive profits from that position after the stock price crashed by roughly 40 or 50%. The stock price is still down, although it has bounced back off those lows. It's still down over 17% year to date in 2025. So in this video, I'll review the company's latest financial results, what the management team said about upcoming products like a lower priced model and driverless car technology. I'll look at the overall business, including the energy segment, and something unique that happened to that segment that hasn't happened to that segment before in a very long time. And I'll bring it all together and let you know what I think about this stock right now. Do I still think investors should avoid this company, or do I think it's finally time to buy Tesla stock? So let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Right. So in the summary of the statement, the company said they continue to expand their vehicle offering, including first builds of a more affordable model in June, with volume production planned for the second half of 2025. That was great news for Tesla stock investors after the management team had really brushed off investors that were asking for a lower priced model. Remember, in previous earnings call, they kept brushing off questions about a lower priced model, saying, oh, please don't pay attention to that. Just pay attention to robots and driverless car technology. Don't focus on our car business. And I understand investors getting that treatment from the management team because the car business is declining. And as a company owner, you don't want investors to pay attention to the part of your business that's struggling. You want them to pay attention to something else about your business that has better prospects than the car business, because let me tell you, its car business is struggling and the future looks worse than it already is right now in 2025. The company also said that they're developing the semi-truck and Cybercab. Both are slated for volume production in 2026. Okay, so interesting comments here from the management team, but as somebody who's been following Tesla and their management team for, 6, 7, 8 years now, what I do with Tesla's management team is take everything that they tell me and reduce it by a certain amount. So I make adjustments. So if Tesla tells me they're planning volume production for the second half of 2025 for a lower priced model, I say, okay, they're telling me second half of 2025. That probably means second half of 2026 or maybe first half of 2026. But it unlikely means second half of 2025. And similarly for the semi-truck and the Cybercab. If they're telling me volume production in 2026, I adjust that to think, okay, volume production probably second half of 2027 instead of 2026. The reason I do this is because this management team in particular, more than any other management team I follow, and I follow over 200, 300 companies, has been over-promising and under-delivering now for almost a decade. They'll tell you that they're going to do something, they're going to deliver a $25,000 model, and it's actually $35,000. They tell you they're going to do something in 2020, and it's actually in 2025. So they have a long history of over-promising and under-delivering. So as an investor, as a prudent investor who looks at facts, who looks at actions and not promises, I need to make an adjustment for that, right? I just need to make an adjustment. And if I don't make an adjustment, then I'm being a silly investor and I'm not being a prudent investor. I'm not paying attention to what the management team has done, to what this company has done in the past, right? And then if I lose money on this stock, then it's my fault for not taking into consideration the company's behavior and the company's performance. So total automotive revenues fell for the second straight quarter, down 16% year over year. The automotive segment is going to experience continued struggles. Tesla's facing increasing competition from companies all over the world that are offering lower priced models and variety that Tesla hasn't had to compete with in a long time. So competition is causing Tesla's sales to decline, and that's understandable. I know a lot of blame is placed on the CEO's political actions, and that has some part to play. But I think more importantly is the competition. As a consumer, when you go out and you have more choice, you're going to choose other models more frequently. Tesla had a dominant market share, and that dominant market share is eroding. And things are looking to be much worse as the United States passed legislation that's going to remove a $7,500 tax credit for electric vehicle buyers by September 30th. So when that is removed, that's a big uh, incentivizer for sales. That's going to cause sales of all electric vehicles to decline even further when compared to internal combustion engine vehicles or hybrid vehicles. And so the overall EV industry will experience a bigger decline. And of course, since Tesla is the biggest electric vehicle company in the United States, they're going to experience a big hit as a result of that change in policy that makes it less favorable to buy electric vehicles. Remember, already consumers were not buying electric vehicles in large quantities. Less than 2 out of 10 consumers are choosing electric vehicles right now when they go out to make a purchase, and that's including the $7,500 credit right now. So imagine what sales are going to be like when you remove that credit. It's not looking pretty for EV sales. Okay. The energy segment. This was once a bright spot for Tesla, but in the most recent quarter, energy segment declined instead of increasing, down 7%, 2.8 billion in revenue. And this segment also looks troubled going forward because this is primarily sourced from China, and China's facing significantly higher tariffs. Tesla's management team said that the energy segment is going to be hit harder than the car segment as a result of tariffs. So that segment is under significant headwinds. Tesla needs to make choices. How are they going to deal with those higher costs of importing those products they need to develop and serve customers that want these services? Total revenues were down 12%. Operating profit margin fell to 4.1%, down from 6.3% in the same quarter last year. I was surprised to see this operating profit margin didn't decline further. Uh, Remember, total revenues were down 12%, and this is a vertically integrated business, and these kinds of businesses experience huge decreases in profit as a result of small decreases in revenue. You can see its operating income overall fell by 42% when revenue only fell by 12%, right? So Tesla benefited from this fact when sales were unsustainably increasing during the pandemic because competition couldn't produce vehicles at the normal rate. So Tesla benefited from an increase in sales as a result of that one-off timing situation. That was not sustainable, and I talked about that. But I think investors ignored that fact. Most investors ignore the facts with Tesla. They listen too much to the CEO's rosy picture that's painted and ignore a lot of the facts that are kind of easy to see if you look at the actual results. But I think Tesla's management team does a good job of shifting investor attention away from the things that are hurtful for the company and focus investor attention more on uh, the things that are not visible, things that are not as quantifiable, things that are well into the future, things that are more abstract. And that has let the company sustain this very elevated stock price amid these kinds of results, with sales falling 12%, profits falling 42%. Cash flow from operations was down 30%, down to 2.5 billion, and the company capital expenditures at 2.4 billion means that they only generated 146 million in free cash flow, which is down 90%. a 90% decline in free cash flow. And it doesn't look like it's going to improve, not in the next quarter, not in the quarter after that, not in the quarter after that, or even in the quarter after that, and not even in the quarter after that. Okay. So you're thinking about maybe free cash flow increases 2 years from now, when or if they develop driverless cars by that time and they get approvals, and the revenue and cash flow from that segment increases enough to offset the declines in automotive revenues, because those are likely to continue declining unless that lower priced model turns out to be a huge hit, which seems highly unlikely at this point. But there's still a probability, there's still a non-zero chance that Tesla produces a lower priced model closer to $30,000, and that facilitates and ignites a interest in the company's electric vehicles, and generates an increase in cash flow. Because remember, if they're not generating cash flow from operations, and their cash flow from operations is declining, down 30% in the most recent quarter, then that's going to leave less money for them to invest in driverless cars, to invest in robotics. So they do have a strong balance sheet with $37 billion in cash, but that money will run out quickly if they're not generating cash from the existing business to support those massive investments in driverless cars that the company is rolling out, with the hopes that they get back more than they're putting out. So what do I think about Tesla stock after the company reported these financial results? Is it a buy, hold, or sell? I am keeping this stock rated as a hold. It, to me, is closer to a sell than it is to a buy, but I'm keeping it rated as a hold because there's still significant upside here. I have to give credit to the CEO for being able to convince investors to hold on to this stock and to buy this stock despite worsening prospects, right? That's something that's a tangible value increase for the share price. I think a lot of investors are invested in Tesla stock because they're so confident in the CEO. That kind of confidence in a CEO is unmatched in any other company. There are relatively few CEOs that can command this kind of respect from retail investors. And so I have to give credit where credit is due for that fact. Otherwise, this company with any other CEO with these current prospects, it would be a no-brainer sell for me. But the CEO and his ability to keep investors engaged and keep investors interested has the rating staying at a hold. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.